Anyone who has been paying attention to the stock market over the past 18 months has seen that it has risen significantly, and the good news is the broader economic backdrop still looks solid. But while things have been looking good, there are definitely things that we need to be paying attention to that could derail the progress we've been seeing. Every month, our team at Nexus looks at what's going on, and we put together a 6-month forward-looking economic outlook. We dig into the data, crunch the numbers, and then mix in some of your favorite memes and movie quotes so that you can actually enjoy consuming this information versus just doom scrolling all day like most of us realistically are. So here's our 6-month forward-looking economic outlook and where we see the stock market heading.
And here we go.
Starting with the US, equities here domestically have been pretty constructive. The huge investments that companies have been making into AI are actually starting to pay off and translating into real results and additional revenue. With that said, it's important to notate that valuations are elevated and a large amount of the gains we've seen have been clustered in a couple of major companies. Beyond the US, international equities are still providing some useful diversification opportunities, particularly in select emerging markets. Many of these international opportunities are trading at valuations that are much more attractive than what we see here in the United States, and they're still benefiting from a lot of the AI infrastructure build out. There's more good news with bonds. They're also in a much better position than they were a few years ago, and we're seeing yields coming up high enough to offer meaningful income to investors. Now, with all the positive news, there are still things that could easily derail the progress we've been seeing. What? Things that we need to pay attention to: interest rates, energy prices, and ongoing geopolitical tensions. These are variables that have to be factored in to potential market volatility and where the market is going to head. As we put this all together, guys, as mentioned, it does look constructive over the next 6 months.
I love it when a plan comes together.
This is primarily supported by solid earnings and the ongoing investment cycle. However, we do have things that we need to pay attention to. Those things are elevated valuations and a handful of live risk factors, which mean that the path higher, it's unlikely to be smooth. This is why we believe that process and preparation are going to matter more than trying to predict every short-term move that we see in the market. Guys, if you'd like to know more about where we see things heading, you can head over to our website, nexuswealthmanagement.org. And if you're ready to have an authentic, honest conversation with an advisory team that will always put your needs first, set up a time, we'll take good care of you, and we'd love the opportunity to earn your business.